When he started in the business, he started out with $100,000 when he stepped into the pit. You needed that kind of money. Today, when you trade futures, you need a minimum of $2,500. That's what the brokerage houses are asking. But you can't risk anything. You have to keep your risk very tight with $2,500. You can't really do much with that. So instead of putting a ton of money in and risking a ton of money, instead of risking $12.50 for every tick, he said, we're going to trade Forex. We're going to put $500 into an account for you. You're going to risk 10 cents at a time, and we're going to build from there. So I started looking at the Japanese yen, the US dollar yen, and that seemed to be kind of a quiet market, and I could follow that, and I was trading 10 cents at a time on a one lot. That was a little restricting, and so I said, all right, well, when the yen is not doing anything according to our rules, maybe I'll look at the euro US dollar. Maybe that might be something that I could look at. So I was watching both of them, and then I was still like, well, you know, we're covering 8 spot markets here. I want to start looking at all of them. So this was a path that, you know, it happened over the course of a while. It didn't happen all at once.
If you want to get into the investment arena and you want to have your hand on the pulse of it, and if you're not set up with real-time capabilities, what can happen to what's happened in the markets today in 5 minutes, you know, and you don't have your finger on the pulse of it, because you may as well, if you don't have your finger on the pulse of real-time activity, you may as well not be investing. And I mean, you're a business owner when you get involved in this. And one thing about this business, what attracts me to this day and to the very first start of when I got into this business, is it was low overhead. And now on the computer, it's extremely lower. I cut my overhead at least $6,000 a month with the screen. Just because I was my own clerk and everything, because now I didn't have to check my trades. They were in, they were already matched, and they were going. And so I have a computer and an internet connection and a place to sit. And I'm up and running, and the sky's the limit. We have 5 rules to get involved in the market, and we like all 5 rules being met, but we're okay with 3. We'll settle for 4 rules. We love 5 rules. Can you wait for all of your rules to be met before you get involved? That takes some patience. And it's one thing that we all know something about. You might think, oh, I don't know anything about the currency markets. Well, all of us use currency every day. We have some in our pocket. So you know more about the currency in your pocket than you do about the S&P 500. So you don't start out with knowing what 500 of the best companies do. You could take advantage of the downside, you could take advantage of the upside of the market. Stock market, you love it. We own stocks ourselves, but you're paralyzed when the market goes down, because all you're in is a buy and hope strategy. You need it to go up. You want the company to go up. But what do you do when it goes down? 1 versus 100. 1 can be a very powerful thing to do, because that's that step that some of you haven't made yet, to put on that 1. You got to put on that 1. And then, you know what? I don't care if it's for a dime, you're a trader. You've become a trader that day. But in terms of you guys who are trading, you got to get to 2. You need flexibility. 1 lot is all in, all out mentality. Because if today, you know, you're short the euro and it gets to that number, it's like, wow, I just made all that money, and you only had 1 on and you got out. Then you say, wow, I could have made all that much more money on this thing. I got out. It's like, oh my God, that's the power of having 2 on.